So we certainly got some pretty insane stuff currently happening to Workhorse Group Stock again, especially as we are now also up some crazy almost 4% as of the last trading day after literally pulling down to just about $7.50 in a major more than 47% drop from the, however, astonishing gains we've seen before. And we're talking here about the recent recovery of the huge 130% from the pullbacks after the absolutely mind-blowing 7,800% gaps at the beginning of the year. But as there still is some incredible short squeeze potential as well as some crucial news and aspects in regard to the company we definitely have to talk about, what we are going to do today is give you an updated insight into what is actually happening to Workhorse Group Stock and the also just released earnings report, as well as break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock, and especially with the second quarter earnings report as well as some big catalysts coming up for the company again. We certainly have some critical aspects to quickly go through, also considering the super important price action currently happening to the stock. But starting off by taking a look at the earnings as well as the business of the company, it quickly becomes evident that Workhorse is definitely not like almost any other delivery car producer. And there actually are a few key factors that certainly set the company apart from its competition, also making up a major reason for the massive initial gaps as well as some huge hype amongst investors, which we'll also quickly talk about in a second, beginning with it literally only producing 100% electric vehicles with tons of extra features such as tracking or larger cargo space built in, as we described more in depth in one of our last videos on the stock. But where it just gets crazy is when now also taking a look at the company's new second quarter earnings, reporting some astonishing improvements when compared on a year-over-year basis in pretty much every single business sector. In fact, we are looking at an incredible more than 1,300% increase just when it comes to sales of the now 14 trucks that got delivered this quarter, marking a significant growth when considering the just one truck at the same time last year also only bringing in $92,000, which is nothing compared to the $1.3 million we have right now. With the company still not being profitable, however, despite being able to reduce about half of the net loss. This brings us to another crucial topic we quickly have to talk about right now before being able to come to a prediction at the end, with it of course being the still pretty difficult challenges that the US-based manufacturer is currently facing. And even taking a look at the current price action alone, there definitely are some major pullbacks noticeable, especially from the recent 130% jumps after the pullbacks from the insane 7,800% ones we mentioned earlier. But as we are currently coming nearer to the major support level we also saw exactly after those massive initial gaps, the technical setup becomes pretty good again, with the first recoveries might even being indicated by the still almost 4% gains since those recent lows. But the crazy percentages we saw happening to the stock simply were not possible without one crucial aspect, some huge hype from especially retail traders. And as the company got mentioned a ton lately on not only forums like Wall Street Bets, but also videos just like this one, there certainly were a ton of people actually buying in and eventually causing a short squeeze like the ones we now already saw multiple times on the stock. But as such a squeeze heavily depends on short interest, which has risen dramatically again as the price continued to fall, a new one actually becomes very likely again. So as e-commerce also continues to grow extremely fast as mentioned last time, capitalizing on the following distribution and logistic demand via an EV option such as of course the stock of Workhorse. And combined with the tremendous hype from retail traders actually continuing to rapidly promote the stock to a ton of new investors as well as the technical setup and very high short interest, another short squeeze is pretty likely again. Alright, if you like this video and want to support our mission of providing free financial information here on YouTube, please ensure you're subscribed and definitely consider leaving a like. Thanks a lot and see you next time.